Hey everybody, it's Jen and Adam back with another market update for you. Adam, we saw a pretty tumultuous end to the week on Wall Street. Everything was moving along pretty well. There was a lot of optimism, and then yesterday happened. So what's going on?
Yeah, that's right. We're recording this on Friday morning, Jen, and the market is digesting an 1,800-point drop on Thursday of this week. That was the worst day on Wall Street that we've had since March, when this pandemic really started to erupt. And so what's going on is investors are kind of doing a little bit of a double take. I mean, there was so much optimism about a jobs report that was better than people expected. We're seeing states reopen. We're seeing some restaurants reopen. And people felt really good about that. And then all of a sudden, it was like this week was kind of a reminder that we are not out of the woods yet. The pandemic is still going on. Cases are rising. We don't have solid treatments yet. And so I think investors just got a little nervous when they started to add all that up and they started to see some of that data. And so the market dropped drastically. Friday morning, a little bit of a rebound. We'll see if that sticks or if there's more bad news to come. On the other side, Jen, the Fed came out with a strong statement. They're going to continue to support the economy. They're going to continue to support the mortgage market, hold treasuries, hold mortgage-backed securities. And that is keeping interest rates down at still record lows for 30 years on average. The problem is when you start talking about record lows, everybody thinks, oh, all I have to do is apply and I'm going to get a record low interest rate that is like at the rock bottom of the market. And there's more to it than that.
Oh, there's so much more to it. Here's the good and the bad. Like the good is like, yes, interest rates are extremely low. And like you said, the Fed wants to keep them that way so people can build up money, like save money a little bit, like things aren't as expensive to borrow. It makes a lot of sense. However, the bad side of it is people see something that says 2.97% on an interest rate and they think, oh, sweet, that's going to be my interest rate.
Yeah.
It doesn't work like that. So
that's the problem with advertised interest rates, right? Like It's not for everybody. And then there's this little thing called points. And what is that all about?
So points, you might hear that every once in a while, or if you see it on a fee sheet. What a point is, it's basically 1% of the loan, basically the loan value. So if you have a $100,000 loan, that's going to be about $1,000 per 1 point. So that is a fee you pay in order to bring your interest rate down. So a lot of things factor into your interest rate. Your credit score, how much money you're putting down, what type of loan you're getting, and then your debt, how much money you have in debt versus how much money you have coming in. That's called debt to income, but points is another thing. So a lot of times people will shop around, and that's totally fine. Get the best deal for you. However, they aren't explained what those points are being charged and why they're being charged to them. So they see a great interest rate, don't see what the points are, and that causes a lot of confusion. So sometimes you're ending up paying $2,000, $3,000 to get the lower interest rate on top of everything else. So it's really, really important that you talk to a loan officer, call your Movement Mortgage loan officer, and really get the full breakdown and explanation. They should explain that to you. Ask them the questions, because that will make a big difference in what you pay in closing costs and fees and what your interest rate will be. And a lot of times, the actual savings on buying points may not be worth it in the long run. So that's another factor. There's a whole lot going on. So don't just go by interest rate. Don't just say, I need that interest rate. That's not the full story. And your loan officer should explain that to you.
You want to find the best deal for you, the best situation for your finances over the long term, over the time you're going to be in the house, not just how do I get the lowest rate possible today? Because points come into play, fees come into play. So when you get those quotes or you see those things that are advertised, make sure you look at the fine print. And even better than that, just talk to a Movement Mortgage loan officer, ask them to explain it to you, and go read on our blog, on our market update, movement.com/blog. We get more into this topic and answer a lot of these common questions in the full market update blog.